What I thought I would do real quick here before the market opens is just take a look at some levels that I'm paying attention to, and I'm just using the Substack Studio here for the first time, so bear with me for a second. Let's see. Let's see. Looks like I have to flip tabs to share. Okay. So let's go with 5-minute futures. Move to 5. All right. So let's go back over to the SPX. So you can see that last night after President Trump's speech, futures sold off. You can see that they're slicing or did slice through a bunch of intraday support and resistance levels. You can see back from here, right? And we got a little bit of a bounce in the last 15 minutes. We're pretty much at the lows of the session. ES is down 102 points. NASDAQ's down 480. So what are we looking for today? Well, let's go back here. So let's go to the 4 index daily. All right. So this is the SPX from yesterday. And what I think is interesting is that we did to hold this support level, this old support level from August of last year. We did that on Monday. We saw the bounce on Tuesday, which was actually pretty significant. We recaptured the VWAP from the tariff tantrum low. We got through a bunch of support resistance levels. We got back above the ultra short moving average, which is the 8. Then yesterday we had some fall through and we were trapped by the 200, which, makes sense. Like a counter trend rally back up to the 200 before pausing makes perfect sense. So what I want to watch now is I put in the daily update on Tuesday. I did a whole video about how to evaluate this bar here. And I think it's worth going back and looking at. There's probably 5, 6, 7 different criteria. And I said this is a B plus in terms of a bar. It's a good start, but we need to see a few other things in order to convince us that this is the final pullback. And I'm not saying it is the final pullback. I'm just saying there's a process where we try to, turn off the news, not listen to what your stupid brother-in-law is saying, and just look at the data. So this was a good start. Then what I want to see is if I put a Fibonacci retracement here, and by the way, I don't believe there's any magic in Fibonacci's. I think it's a lot of self-fulfilled voodoo, but it's just a good reference point. It's a super easy reference point to put on your chart. So I'm going to look at the move from the low on Monday to the high yesterday, right? That's the counter trend move. And what I want to see is I want to see a pullback as shallow as possible. I don't want to see a pullback over the 50% level, which is right here. So 50% would be about 64.77. And why is that? Because if you get past 50% of a pullback on any time frame, the odds just go up that the move is not going to hold, right? So if you're pulling back here into you're pulling back into this area, let's see, like a very narrow pullback, or even to the 38 level right here, that's okay. That's normal. So obviously the SPX is not open, index is not open right now. So let's go and just take a look at the futures where they're at right now. So go to the tab, share screen. There's got to be an easier way to do this. I'll have to figure it out. So let's go to the ES and let's turn it to daily. And we can do the same thing. Now, this is live, right? So we can put a fib retracement here in the low. We can take it up to yesterday's high. And where are we at right now? Okay, so we tagged the 50 earlier in this session. So we're kind of at the precipice. We're at the spot where I really don't want to see us close below here. I don't even want to see us go below here, but I don't want to see us close below this level. So best case scenario, we still get a little bit of a lift as we get towards the open and maybe end up in this area. What I'd like to see is I'd like to see a day or two of filling in this area, the upper area of this move. That would give us a really nice base. We'd have like something, like a basing area in here. We come into this area, and then we look for the move after the move. That would be a continuation of what is right now just a counter trend rally. But if it actually breaks back up here and holds, this could be the start of a new uptrend, and it could be the end of this downtrend. It's just a very incremental process. It's boring, but this is what we do. We evaluate potential bottoms step by step. The first step is got to stop going down. Sounds stupid, but it's true. You have to stop going down before you can end a correction. And then we watch for all the incremental things. Are we recapturing levels? Are we recapturing moving averages? The 8, the 21, the 50, the 200. Are we holding, right? And then after we get that move, we're looking for a retracement, hopefully as shallow as possible. And then that move after the move that's when we want to get more active. The reason why is at that point, we'll see a lot of names that are coming on, just kind of organically coming on to the watch list because they'll be setting up as well. And then you've got that pullback level to trade against. So you get the counter trend rally, you get a shallow pullback. That's where you can put your stop, right? And so if you get the move up back above the previous pivot, pretty good chance that you're going to be profitable on those trades. If it doesn't, if you fail below the little pullback level, you're out and you just move on and you wait to see if we can get another setup. And this is what people don't tell you about trading is that it's boring, right? It's lather, rinse, repeat. You just are looking for the same patterns over and over again. And it's a lot of doing this, just sitting there and waiting and letting other people chase the intraday moves, chase every little tweet. We don't like to do that here at the Lund. We like to wait until we can put the odds the most in our favor that are possible. Then we act. When they're not in our favor, when we're in a risk off scenario, we sit, we wait, we watch, we do our homework. We look at our shopping list to see what we think the next group of winners could be. And those are the ones that are showing the best relative strength. We also have a life. We, engage with our family, our friends. We do things so that we're not distracted by every little move in the market, that we're not jumping in and getting chopped up, and we're waiting for better opportunities. So anyway, I decided to pop in this morning, give you that little look at the markets. And I think that is it. All right. I will see you in the daily update after the close.